The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, what did the market trade look like coming back from the 3-day Easter holiday weekend? That was going to be the big question mark on Monday. And overall, we'll call it a fairly lackadaisical type of trading day. There was some strength out there in corn and in the wheat markets, a little pressure in beans, mixed day in livestock. Plenty to take a look at. We have a April WASDE report coming up on Tuesday. John Heinberg, Total Farm Marketing, joins us here today to discuss everything going on with the markets. John, hope you had a good Easter holiday weekend. And, you know, a lot of traders felt like coming out of that holiday weekend, tiptoed their way to the market on Monday. A few things of note, but overall, to me, it felt kind of quiet as we kicked off the week.
Yeah, maybe the warm weather fired up some money flow. I don't know. Going into at least the grain markets for the most part here today. Nice day for corn, especially old crop corn. Good, decent strength across the livestock complex today as well. And, you know, wheat market trending a little bit higher. And beans hung in there. You know, again, we got USDA numbers tomorrow. April's really not that big of a report in terms of, you know, it's more of a step to the next one. Everybody's really focuses on that May report and those first numbers for 2013 marketing year. You know, but same time, we got some questions that need to get answered tomorrow from the USDA. You know, what are they going to do with these tighter grain stocks, and what's that going to do to the carryout for beans and the carryout for corn? You know, expectations are for those numbers to come down, and they should. Now, how does that get handled in the balance sheet? That's going to be the biggest thing I think we're going to see tomorrow. Now, the market's probably priced some of those things in, and today we saw some squaring up and some money flow, you know, after last week's kind of weakness and like a little optimism, maybe with a little bit of springtime buy-in here.
Well, and thinking about some of that optimism here, maybe a little squaring of those positions ahead of that report. Like you said, typically April's not a very big report, but, you know, we still got to reconcile what we got from the end of March when it comes to those grain stocks numbers, et cetera. So I think, if anything, this report should at least help set the picture a little bit more as we head towards the month of May and get into this planting season more, John.
Yeah, very much so. You know, and again, like I said, we're just really curious how they're going to handle those grain stocks numbers and when they put them into the report. You know, where do they make the adjustments on the balance sheet? You know, did we have a little extra feed demand on the corn side? You know, obviously that's telling us too that the crop wasn't as big as it was possibly in, you know, off the last when those numbers came out in January. So we'll have to see how it comes together. You know, the biggest thing is, you know, especially with beans, you know, we're talking a fairly significant move as the USDA have the, for lack of a better word, the guts or the drive to put this a sub 200 carry out on old crop here at this time frame. I don't think so. But then where's the adjustments come from? You know, so we'll have to see how that plays out in the marketplace overall. You know, and then on top of it, watch the money flow last week. There are buyers of beans. Okay, they moved corn back to a long position again, so there was some money flow back into the corn market, and maybe that just kind of followed through a little bit here this week. You know, to start this week with that optimism that we see a little bit of a seasonal move from now, probably till the first of June. That this market might hold some value here, you know, giving guys some opportunities to make a few sales or build some defense, and especially as they're getting busy here in the next few days and out in the fields.
Well, and thinking about building that defense, you know, it's that time of year, like you said, we're getting busy in the fields in many areas outside of, you know, essentially the northern plains. They're going to have the snow melt and the flooding issues there the next couple of weeks, but it seems like everyone else is going to have a window here to really get in the field. So as we're thinking about a busy time of year, I think sometimes maybe we forget about our marketing. So what would you say to farmers who are getting ready to ramp things up here as far as risk management when you look at this grain trade as a whole? What are some things they need to maybe keep in mind before they get super, super busy, John?
And that also may have been some of the strength we saw in the corn market today too. Again, we got a tight supply picture, and guys are going to get rolling, and the last thing they're going to be thinking about is delivering corn or moving corn. So did that bring a little bit of buying into the market to incentivize that? Especially with that old crop price where it moved today. Biggest thing when they get busy like this is look at the market, set some targets, and let them work. If those targets hit, whether it's buying some puts, hitting some cash sales, just let them go. Don't overthink things here because you got your mind getting pulled a million different directions. There's still a lot of good value in this market. And again, maybe we hit the bottom of a range today. Kind of felt like that in the old crop corn. Kind of felt like that at least too in the bean market with that 1460 July number kind of holding ground again today. This thing can come back up here to a top end of the range, and that's where you want to make some more of those sales and get caught up if you're behind. Same thing on the new crop side. 550 was a big test this morning in that December corn. Snapped off that pretty nicely to finish, 12 cents higher off that today. So it kind of tells me that, hey, that might be in an area that now we start to make sure we get some targets above this. Go ahead and get focused on your field work. If those targets hit, you take them and move on. So that's going to be kind of, like I said, for the focus now is just staying disciplined to your targets and let them go. Allow some of those working orders to do their job for you.
Well, and that's the thing, because the other part of this too is we get busy in the field, but with the weather situation that we'll have, that weather volatility the next 6 weeks can really, move these markets one way or another. We could see swings, and you throw in the algorithm trading and the computer trading, it can amplify some of those moves on a day-to-day basis. So to your point, getting some of those targets out there really seems to be key in this type of environment, John.
Very much so. And again, with the rampant trade that we do get, a lot of times targets hit at 2:00 in the morning when you're sleeping, and we get some run out somewhere in that regard. So, that's why you use them. And again, you stay focused on them. And if there's a reason you put it there, you let that reason work. And if that target hits, you make that sale, you pick up that put, or you buy that call, or whatever you're trying to do in this window, to kind of manage the risk in the operation, while I know everybody else is focused on getting machinery rolling, getting in the fields, making sure everything's in the right place. This is that time of year the farmer wears so many different hats. The marketing hats kind of get stuck in the back of the pile, and we kind of forget about that one. So that's where, again, stay disciplined, those targets, get them out there, let them work. So that way, at least, as I'm out in the tractor, I'm getting things done, getting rolling for the next year. I'm hitting some sale targets, and they're covering me there in that regard.
How about over in the livestock trade on Monday? I was pretty happy with how feeder cattle rebounded off of the lows with the corn move to the upside. I wonder if just the fundamentals under that cattle market just too strong, and that's what turned us around on Monday. What's your thoughts there?
That and the money flow. We saw a big movement on the money side last week, heavily pushing into the cattle market, obviously being fueled by that strong cash tone here at the end of the week last week. Expectations are for that cash tone to stay steady or higher again this week. Slaughter numbers were really down overall. Obviously, some of them may be tied to the holiday or wherever in that regard, but we're also in that window. The weather's turning a little bit nicer here. I've got burgers going on the grill tonight. It's already that window where we're starting to see that retailer demand start picking up as we're focusing on Memorial Day. Then we've got Father's Day. Those are fairly good grilling weekends. Watch what the retail values do. Big jump, $10 plus higher at choice carcasses last week. Watch that choice select spread. If that starts pushing out between those two grades of beef, that's going to give the packers a little bit more backbone to keep supporting these cash prices into a tight supply window. So if that's the case, we still got some more room in this cattle market to work. Plus, you got the April contract getting closer to expiration. June trading basically $8 underneath of it. Still looks like a pretty good value, especially if the cash market's over the 170 handle. That way, we got some more room for this market to go. Biggest thing is, don't get greedy. Again, great value out there. Make sure you're protecting it. A lot of times livestock markets like to move in that V shape. We just, we just saw this off the recovery of that last sell-off, how quickly we came back up. We can see that spin back over pretty quickly to the downside. So again, using puts out of the money, protect the value, lock in the gains that you get here. Keep your cattle open if you don't want to make the cash sales, or if you make those cash sales, use some out of the money calls and keep ownership over top and enjoy the market that's getting put in front of you as a cattle producer.
Very, very true. On the flip side, in the hog trade, we've been talking about it. Just this hog market beat up here the last couple of weeks, and again on Monday, that front month contract staying pretty close with the cash index. We keep talking about this. Some folks would probably wish their bacon was a bit cheaper at the grocery store, John. But overall, there's just a big supply of pork out there in front of us, and that's not helping matters, I don't think.
It isn't, and that's one of the it's the exact opposite situation we're seeing in the cattle market. And even that last week's export sales numbers of 50,000 plus, and we didn't get much of a move at all in terms of the hog market. That was pretty disappointing. Now we did get some strength today. Now maybe we're past that Easter holiday. We start thinking about that retail demand. Does that help out that June and the summer month contracts, which are obviously beaten down pretty aggressively? But still watching that premium over the index makes me a little bit nervous of those contracts, and we don't start seeing the cash market go. So it's going to be a combination of things we need to see. Retail values today at midday were nicely higher. Hopefully that can lead the cash market higher as long as those hold and get back up over that $80 handle on the carcass value. That gives the packers a little bit more incentive to start bidding up going into those summer hogs, which should be a little bit tighter. But at the same time, there's just still too many out there at this window. Just allow this market to take off. Obviously, April coming closer to expiration is going to be a big factor in this too. Maybe we just need to get that contract out of the way, and then we can start focus on those summer hogs.
John, how about that dairy market? Any thoughts there before we wrap up the show today?
That dairy market, again, just keep watching the demand side. We had our pop after the California floods. Now we're back re-challenging some of the lows. Things aren't looking really good on the charts today. We'll have to see if this one can hold. Looking at that May contract, re-challenging that low from back in early March. Cheese down 9 cents on the barrel side today. That just makes things look a little more cautious. But this is an area that needs to hold, or we're going to continue to get right back on that slippery slope that the milk market was in just a handful of months ago, or a handful of weeks ago, before that California flooding came into play.
John, any final thoughts for us before we wrap up the show here today?
Like we just kind of talked about in marketing in general, you're going to get really busy here, producers. Obviously, everybody's getting antsy. You can see the tractors are just lined up, ready to go here because of the Easter weekend. If this weather holds, you're going to see. I'm curious to see what those planning numbers and some of the progress numbers will be over the next handful of days. We'll get that next report here even today. So we'll see what's happening. But don't forget about the marketing side. Still good value here. Still a lot of volatility in these markets in front end, as well as the outside markets that could take the value away. So again, stay disciplined. Make sure you're using risk management tools while you're still busy out there getting things ready for the next fall.
John, if folks need some advice, they want to talk about things, maybe they're riding along in the tractor cab and have some time and want to give you a call, what's the best way to get a hold of you, John?
Sure. Love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, John H. at totalfarmmarketing.com. Again, the website of ours, totalfarmmarketing.com. Get a lot of resources for producers out there. Like you said, if you just give me a call while you're out there working, love to chat with you, find out how things are going. And again, just, be a bit of a resource in times that are busy, obviously, and hard to keep an eye on the marketplace.
Well, we appreciate the insight, as always, into the markets. John Heinberg with Total Farm Marketing. Thanks for joining us today, sir. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.